Miners packed their buckets and ran away in the middle of the night, and the price of Bitcoin went from $120,000 to $110,000. The Satoshi Nakamoto statue was stolen, and the organizers were furious and offered 0.1 Bitcoin for it. The entire network is wanted for the statue thief. Bank bosses are collectively suffering from blockchain anxiety. Who will be able to reap the benefits of this wave of technological upgrades? The 73,000 non-farm payroll data exposes Trump's true colors. What is the political economy behind his outburst? Trump's second son is coming to Hong Kong to support the campaign Bitcoin Asia 2025. Will you join this wave of top political and business events?
Monday, August 4th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. This July, Bitcoin experienced a dramatic rise and fall. At the beginning of the month, it soared to $120,000, riding the wave of halving and expectations of easing, enjoying a period of unparalleled popularity. However, the price stalled in mid to late July and reversed course, plummeting to a low of $111,000 by the end of the month. This decline wasn't a coincidence. Three underlying forces were at work. First, the market's stockpile suddenly dried up, with the liquidity inventory ratio halved from 12 months to 3 months. However, with no one taking over, scarcity became a vulnerability. Second, ETFs were known for their fickle nature, with just over 8,000 bitcoins flowing in, only to see 6,000 disappear immediately, completely undermining stability. Third, while smart money was still secretly increasing its holdings, the volume was minimal and they didn't dare to aggressively support the market during the decline. Under the triple attack, Bitcoin is like a diver with no one to catch the ball. With a slight push, it crashes through the floor. Although Bitcoin prices have been somewhat volatile recently, don't be alarmed. On-chain data indicates strong buying. A core indicator of demand, simply the difference between newly mined coins and the movement of older coins, shows a net absorption of approximately plus 160,000 bitcoins over the past 30 days, indicating that spot supply has not been dumped, but instead purchased. Furthermore, die-hard addresses, known for their buy-only nature, have quietly increased their holdings by plus 50,000 bitcoins, a typical example of high-conviction investors buying the dip. Even more interesting is that Bitcoin reserves on over-the-counter (OTC) platforms have plummeted from 550,000 in 2021 to just 145,000 today and are also being slowly liquidated. While short-term prices appear to be volatile, these demand-side data suggest that, in the long term, bulls haven't given up and are becoming increasingly reluctant to sell. While Bitcoin's recent decline may seem minor, miners have actually been quietly selling off their holdings. Over the past 2 weeks, they have reduced their holdings by over 3,000 bitcoins, dropping from 1.8098 million to 1.8069 million. While this apparent drop is only 0.17%, in today's illiquid market, even a small amount of selling pressure can have a ripple effect. Trends indicate that miners have been reducing their holdings since May 2024, with the pace of selling accelerating particularly since mid-July. Why? Perhaps it's due to higher electricity costs, tight cash flow, or a feeling that it's almost time to cash out. Historically, miners' collective cashing out has often led to short-term volatility, especially when no one is willing to take over. However, this round of reductions hasn't been particularly drastic, nor can it be considered a market crash. The key question remains whether miners will continue to sell off their holdings over the next week or two, and whether the market can absorb the pressure. Please like and follow us for the latest 24-hour updates in the cryptocurrency, blockchain, and mining circles. Click the bell to join our channel and become a member to receive your wealth code Monday through Friday. Bitcoin has recently been surging, and Satoshi Nakamoto's 1.1 million bitcoins have also soared, pushing his theoretical net worth to 11th on the global rich list. Yet remarkably, This mysterious wallet has remained untouched since 2009, despite the shifting cycles of bull and bear markets and the ever-changing cryptocurrency landscape. This silence has inspired countless artists. In 2021, Budapest unveiled the world's first mirror statue of Satoshi Nakamoto, symbolizing "You and I are all Satoshi Nakamoto." Slovenia even ingrained this into its city DNA, creating the world's first blockchain square in Ljubljana. Recently, an even more mysterious and controversial Satoshi Nakamoto statue in Lugano, Switzerland, unexpectedly became a hit because it suddenly vanished.
The Satoshi Nakamoto statue in Parco Chani, Lugano, Switzerland, was stolen on August 2, 2025. Designed by Italian artist Valentina Picozzi, the statue was jointly unveiled by Tether and the city of Lugano in 2024. It uses a disappearing visual effect to symbolize Satoshi Nakamoto's mysterious identity and the spirit of crypto decentralization. The incident sparked heated discussion in the crypto community. Industry insiders, including the CEO of Pointsville, stated, "The statue may be destroyed, but the concept remains." The curator, Satoshi Gallery, stated that it will continue to advance its global deployment plan and hopes that this incident will serve as a turning point for reflection on the collision between real-world security and crypto culture.
The Satoshi Nakamoto statue, supposedly capable of making itself invisible, actually lost itself. Upon seeing this, the organizer, Satoshi Gallery, immediately launched a bounty, 0.1 Bitcoin, approximately 15,000 USD, for information leading to its discovery, adding a rather cheesy remark: "You can take the statue, but you can't take the soul of blockchain." Even more outrageous, they then immediately announced plans to install similar statues in 21 cities around the world. And guess what? Before the announcement had even faded, city officials pulled the statue from Lake Lugano. And wow, it was completely shattered. What a confusing operation. They wanted money but not the statue, and then they destroyed it. So, is this a grudge against cryptocurrency or simply against the statue itself? The Satoshi Nakamoto statue, supposedly capable of making itself invisible, actually lost itself. Upon seeing this, the organizer, Satoshi Gallery, immediately launched a bounty, 0.1 Bitcoin, approximately 15,000 USD, for information leading to its discovery, adding a rather cheesy remark: "You can take the statue, but you can't take the soul of blockchain." Even more outrageous, they then immediately announced plans to install similar statues in 21 cities around the world. And guess what? Before the announcement had even faded, city officials pulled the statue from Lake Lugano. And wow, it was completely shattered. What a confusing operation. They wanted money but not the statue, and then they destroyed it. So, is this a grudge against cryptocurrency or simply against the statue itself?
I'm a believer in stablecoin, a believer in blockchain, not personally a believer in Bitcoin itself.
From 2020 to 2024, global banks invested in 345 blockchain projects, primarily in startups. Citigroup and Goldman Sachs each invested in 18, while JP Morgan Chase and MUFG each invested in 15. Within 4 years, 33 financings exceeding $100 million were completed, with a focus on trading infrastructure and tokenization. Brazil's CloudWalk and Germany's Solaris are representative examples. Global systemically important banks completed 106 investments, 14 of which exceeded $100 million. Institutional trading volume in the United States and Japan led, with active participation from Singapore, France, and the United Kingdom. Global blockchain startups received over $100 billion in funding.
Ultimately, this blockchain craze is riding the wave of regulation. The US recently passed the Genius Act, requiring bank endorsement and transparent audits for stablecoins. The EU is not far behind, and with the introduction of the MiCA, it has directly brought all crypto service providers into the regulatory compliance race. Under these regulatory safeguards, on-chain financial applications are becoming increasingly viable. For example, JP Morgan Chase is using its own JPM coin for institutional settlement, while Singapore and Germany have begun piloting DLT cross-border payments. Traditional financial giants have also understood this. This isn't a matter of disdain, but a matter of necessity. Will you invest? Others are already pouring in. It's said that $18 billion was invested globally in the blockchain industry last year, half of which went into regulatory compliance and tokenization infrastructure. For traditional finance, integrating with blockchain early on is crucial to keep pace with business upgrades. For blockchain projects, the backing of these established players gives them a stronger foundation. What's next? Just wait for the main force to rush in. If you don't figure it out, you may not have a place left.
From statistical fraud to economic paralysis. Is the United States repeating Argentina's mistakes? Bitcoin Asia 2025, the first Asian event after Bitcoin hits $100,000 early bird 10% off tickets.
The unexpected non-farm payroll figures shocked the market. The U.S. Bureau of Labor Statistics just released July's non-farm payroll data, showing only 73,000 jobs, far below the expected 110,000. The figures for May and June also slashed 258,000 jobs, completely stripping the labor market of its slump. This immediately sent investors fleeing for safe haven assets, with both U.S. stocks and the cryptocurrency market reversing course. The entire crypto market cap is currently approximately $3.7 trillion, of which Bitcoin accounts for $2.26 trillion, or 61.2%. Stablecoins are also active, with a market capitalization of $266.9 billion, up 0.65% in the past week, with USDT holding a steady 61.67%. Trump was furious upon seeing these figures and launched into another tirade.
From 2020 to 2024, global banks invested in 345 blockchain projects, primarily in startups. Citigroup and Goldman Sachs each invested in 18, while JP Morgan Chase and MUFG each invested in 15. Within 4 years, 33 financings exceeding $100 million were completed, with a focus on trading infrastructure and tokenization. Brazil's CloudWalk and Germany's Solaris are representative examples. Global systemically important banks completed 106 investments, 14 of which exceeded $100 million. Institutional trading volume in the United States and Japan led, with active participation from Singapore, France, and the United Kingdom. Global blockchain startups received over $100 billion in funding.
Major move here by the president. Those jobs numbers that come out every month, yes, they are subject to revisions. These are larger than normal revisions that we saw this morning. That's part of what you've seen the market reacting to all day. But when it comes to government statistics and the jobs numbers in particular, the independence of these agencies and the accuracy of the numbers has always been paramount. So accusing these agencies of politically manipulating the numbers.
If no one trusts a country's data, it's a serious matter. Take Argentina. From 2007 to 2015, the government refused to allow the National Bureau of Statistics to report actual inflation, claiming it was rising slightly, while supermarkets reported doubling prices. As a result, no one trusted the accounts, money fled, the market crashed, and the economy collapsed. Now, the US is also in danger. Trump, on his own Truth Social, singled out the director of the Bureau of Labor Statistics and the chairman of the Federal Reserve, calling the non-farm payroll data outrageous. The problem is, once data becomes an ornament of power, whether it rises or not, it can be interpreted as "I'm great" or "they're bad." Who can be trusted then? If the world truly only considers positions, not facts, it's not just playing politics. It's playing with fire. The moment Bitcoin broke $100,000, the world understood that this currency wasn't just a niche phenomenon. It had truly entered the mainstream. Hong Kong in particular had long since secured its position as a superconnector within the global digital asset community. Hong Kong Monetary Authority Chairman Eddie Yue personally announced that by mid-July, 22 banks would be permitted to sell digital asset products, 13 would be permitted to issue tokenized securities, and 5 would offer custody services. Hong Kong's trading volume in the first half of the year reached 26.1 billion Hong Kong dollars, surpassing the entire previous year and surging 233% year-on-year. Not only banks were rushing in, but asset management institutions were also fully engaged, and even the government was promoting tokenized bonds. Hong Kong was fully engaged in an on-chain upgrade. The Bitcoin 2025 conference in Las Vegas in May was like a gaokao for the cryptocurrency community, with miners, investors, and developers all in attendance. Regulatory breakthroughs, technological innovations, and advanced applications all contributed to the emergence of a new global financial order. Meanwhile, Bitcoin's popularity spread from the gambling city to Hong Kong.
The Bitcoin Asia Summit will be held at the Hong Kong Convention and Exhibition Center on August 28 to 29, 2025. As the Asian flagship of the Global Bitcoin Conference Series, it is expected to attract over 12,000 developers, over 200 guests, 500 project partners, and over 300 media outlets. Eric Trump, Trump's second son and co-founder of American Bitcoin, will be the keynote speaker. Other attendees include Casey Rodimer, founder of Ordinals, and Wu Xinda, COO of Matrixport. Interested parties are advised to secure tickets in advance. Use the invitation code BTV8888 to receive a 10% discount.
This time, I'm not just a spectator, I'm honored to be the first invited speaker at Bitcoin Asia. Stay tuned to BTV. As a frontline reporter and financial expert, I'll be taking you right into the action, covering exclusive interviews, insights, and financial trends. Bitcoin Asia isn't just an industry gathering, it's a central voice for Asia's financial discourse. You may have noticed that more and more Asian companies are turning to Bitcoin as a ballast for navigating cycles. Whether you're involved in policy, finance, or Web3, this collaboration between FX168 and Bitcoin Asia asks a crucial question. Are we spectators or designers of the future? The language of blockchain is already rewriting the financial landscape. Have you learned how to speak up?
Justin Sun successfully checked in on the New Shepard space shuttle. After a 10-minute and 14-second suborbital VIP experience, he walked out of the cabin with a "that's it" smile on his face, becoming a new member of the Chinese Entrepreneur Space Club. Musk suddenly opened a metaverse matchmaking agency on the X platform, transforming Grok accounts into virtual partners, including the sweet girl Ani and the romantic Valentine. And mascots rut, netizens exclaimed. So now AI can also show off their love? Famous Bitcoin ATM Michael Saylor rarely updated his cryptocurrency holdings over the weekend, sparking speculation among the public. Is his wallet empty? Or is his keyboard broken? Brian Armstrong laughed out loud after seeing the UK ban on crypto ads. Can the coffin lid of the internet ban still hold it down? The more it is banned, the faster it spreads. I suggest learning to memes physics. RSXYZ, the company renewed its holdings for 31 more coins at a hefty price of $117,000 each, bringing its total holdings above 50. The CFO, observing the fluctuations, calmly stated, "This is just the beginning. Our goal is to become the most popular coin holder in Southeast Asia."
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.